Welcome to the Ontario Mortgage and Real Estate Insights Podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host. I'm Sandy, your guest host from Keller Williams Legacies, here to provide you with insights sourced from reputable news outlets to help you stay informed.
Steve Hamlin here. This is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're diving into some concerning news regarding Canadian consumer insolvencies. It seems like we're reaching levels that we have not seen since the global financial crisis of 2009. Sandy, what are your thoughts on this?
Well, Steve, the numbers are definitely alarming. According to the Office of the Superintendent of Bankruptcy, there was a 4.8% year-over-year rise in filings for the third quarter of 2025. That's 36,256 filings, making it the third highest quarterly volume since 1987. It's quite unsettling to think about how many Canadians are struggling right now with their financial obligations.
Absolutely, Sandy. And it's worth noting that experts like Wesley Cowan, a licensed insolvency trustee and vice chair of the Canadian Association of Insolvency and Restructuring Professionals, have pointed out that these insolvencies often result from financial pressures that have been building quietly over time.
That's right, Steve. And there's a stigma attached to debt that keeps many people silent until it becomes overwhelming. Cowan emphasized the importance of having open conversations about debt, particularly during Financial Literacy Month. He believes that reaching out for help early can make a significant difference.
It's interesting to see that while consumer insolvencies are up, business insolvencies have actually decreased by 15.5% year over year. However, Craig Monroe from CARP warns that this might not indicate better business health. Some business owners are possibly just delaying filings by juggling debt or negotiating informally with creditors.
Yes, and that delay could mean that the official numbers don't fully capture the financial challenges businesses are facing. It's a reminder that stigma can impact both consumers and businesses when it comes to insolvencies.
And if we look at the household credit landscape, there are signs of strain beneath the surface, despite an appearance of stability. CIBC Capital Markets has warned that with mortgage renewals expected in 2026, more Canadians could face financial pressure. Economist Benjamin Tal noted a shift between rising proposals and falling bankruptcies, which could be masking deeper issues.
Ontario and Quebec are leading the country in insolvency filings, with British Columbia seeing the sharpest increase. It's crucial for Canadians to understand their financial situation and know where to seek help. Licensed insolvency trustees offer a confidential space to explore debt relief options, as Craig Monroe highlighted.
Let's shift gears a bit and talk about how Canadians are bracing themselves for higher mortgage rates. According to a recent survey by TD, there's quite a bit of anxiety among homeowners who are looking to renew their mortgages in the next year.
That's right, Steve. Almost half of the Canadian homeowners surveyed anticipate that they'll be making larger monthly payments when they renew their mortgages. And it's not surprising considering many of these mortgages were taken out during the pandemic when interest rates were at historic lows.
Exactly, Sandy. The survey highlights that 22% of Canadians will be renewing their mortgages in the next 12 months, and the Bank of Canada reports that 60% of all outstanding Canadian mortgages are set to renew in 2025 or 2026. So, there's a significant portion of the population that's preparing for potential financial strain.
And it's affecting their financial planning, Steve. A significant 73% of those surveyed say they're planning to cut back on expenses to meet their mortgage payments. In particular, 43% are considering putting a hold on home renovations, which is quite telling about their priorities.
It's interesting to note that while renovation costs have increased across Canada, Ontario has seen a slight decrease. But still, Canadians are cautious. Some are even considering selling their homes and downsizing or moving to more affordable neighborhoods.
And the anxiety doesn't stop there. Patrick Smith from TD pointed out that Canadians are also dealing with economic uncertainty at home and global instability abroad. This only adds to the financial anxiety that many are feeling.
That's a good point, Sandy. Despite the softening of housing prices in many markets, they are still perceived as high by potential first-time buyers. The survey found that 55% of prospective homebuyers are cutting back on unnecessary expenses to save for a purchase.
And 31% of those potential buyers are considering cashing in investments from their tax-free savings accounts and registered retirement savings plans to help fund their home purchase. It's a tough decision, but it shows how determined many Canadians are to own a home.
When it comes to choosing between a fixed rate and a variable rate mortgage, the survey indicates that 3/4 of Canadians are leaning towards fixed rates. This preference for predictability and stability makes sense, especially in uncertain times.
Absolutely, Steve. As Patrick Smith mentioned, while variable rates might offer lower interest, a fixed rate could be more suitable for those with a tight budget or for first-time homebuyers who value consistent payments. It's all about finding what fits best for each individual situation.
And yet, only 35% of those surveyed have sought advice about home ownership. It seems there's a need for more accessible professional advice to help Canadians navigate these complex decisions. As Smith from TD said, having quick access to advice can boost confidence when buying a home.
In today's Ontario real estate market, it seems sellers are facing a bit of a standstill as buyers are increasingly willing to wait for a better deal. According to Matthew Regan from Re/Max Escarpment Realty, if a house is priced even a little too high, it can sit on the market for an extended period.
That's right, Sandy. Regan mentions that days on market are piling up, particularly in areas like Oakville, Mississauga, and Burlington. He believes that the key issue here is seller expectations, which might be set too high given the current market conditions.
It's interesting to see how buyers react once prices are adjusted. Reagan shared examples where significant price cuts led to quick sales. For instance, a property on Devon Road in Oakville eventually sold for $1,370,000 after the asking price was reduced to $1,439,000, having initially been listed at $1,549,999.
Exactly, Sandy. It seems that once prices reach a level that buyers perceive as fair, they are ready to act. Another example is a semi-detached house on Brant Street, which sold for $1,850,000 after a price reduction from $2,399,000 to $1,999,999. This demonstrates the importance of pricing strategy in today's market.
And yet, even with these examples, some sellers are hesitant to lower their prices. For instance, a property on the shore of Lake Ontario lingered on the market despite a price drop from $6.5 million to under $5 million. Reagan himself decided to purchase it for $4.2 million, seeing potential in renovating the property.
That shows a strategic approach, Sandy. It's about recognizing when a property has reached a price where the investment makes sense. Reagan and his business partner, Alex Irish, plan to revamp the property to appeal to downsizing buyers, highlighting that sometimes taking calculated risks can pay off.
Meanwhile, active listings remain high, and the Greater Toronto Area has seen a 7.2% drop in average prices compared to last year. Sales have fallen by 9.5% from October 2024, with active listings increasing by 17.2%. This indicates a market correction that may take some time to stabilize.
It's a challenging landscape, Sandy. Although the Bank of Canada cut interest rates twice this fall, sellers hoping for a market boost might need to adjust their expectations. Regan suggests that pricing realistically is crucial, as some sellers fail to grasp the abundant supply outweighing buyer demand.
That's a good point, Steve. While some sellers see the downturn as temporary, Reagan believes it could take years for prices to rebound. He advises that sellers might sell for less than expected, but they can purchase their next property at a similar discount, which could be appealing in a buyer's market.
Ultimately, it's about understanding the cyclical nature of the market. As Reagan points out, prices only rise when supply is limited and demand increases. It's a reminder that patience and strategy are key in navigating real estate investments. Let's dive into the latest data on building permits in Canada. It seems there's been a decline in the third quarter, with permits down by 5.4%. That's a pretty significant drop, considering the total value of permits issued was $34.6 billion.
Yes, Steve, and what's interesting is that despite this overall decline, September actually saw a rebound with a 4.5% increase in permits. This was largely driven by multifamily projects in Alberta and Quebec, as well as single-family gains in Ontario.
Right. But the quarterly numbers tell a different story. The decline in the third quarter marks the second consecutive quarterly drop, and it's the lowest level we've seen since 2018. This indicates a cooling effect in the construction intentions over the summer.
That's true, Steve. The residential sector in particular saw a decline of $213.5 million, or 1.0%, bringing it to its lowest level in constant dollars since 2018. Ontario's sharp pullback in the institutional sector played a significant role in this downturn.
It's worth noting, though, that there has been an increase in the number of housing units approved by municipalities this year. Up to now, 231,100 units have been approved compared to 215,200 during the same period last year. So, there is some growth in terms of units, even if the value of permits is down.
Exactly, Steve. The increase in housing units is a positive sign, suggesting that while the value of permits might be down, developers are still pushing forward with new projects. It's a complex picture that reflects both challenges and opportunities in the market.
Absolutely, Sandy. The non-residential sector also saw some gains, with a 4% increase in commercial and industrial projects, which helped offset declines in institutional construction. This indicates that while the residential market faces challenges, other sectors are still showing resilience.
It's a reminder that the real estate market is multifaceted, and while certain areas might be experiencing a slowdown, others are picking up the slack. It's important for investors to look at the broader picture when making decisions.
Definitely, Sandy. As we continue to monitor these trends, it will be crucial to keep an eye on how these shifts impact the overall real estate landscape in Ontario and across Canada.
Mortgage fraud is a topic that's been gaining attention, especially with the complexity of schemes that fraudsters are using these days. It's a concern for many Canadians, and according to a recent survey by Polaris Strategic Insights, 58% of Canadians are worried about mortgage fraud in 2025.
That's a significant portion, Sandy. The survey also shows support for allowing lenders and brokers to confirm income information directly with the Canada Revenue Agency. This move could potentially help curb fraudulent activities and protect honest buyers.
Absolutely, Steve. But detecting and reporting mortgage fraud is not straightforward. Fraudsters have an array of tools to make false applications look credible. Doug Robinson from Scotiabank highlighted some warning signs at the Mortgage Professionals Canada conference in Ottawa.
Yes, Robinson pointed out that lenders are now focusing on how applicants present their income. One red flag is when consistent biweekly payments are set up solely to falsify an application. These payments often stop once the mortgage application is completed, with a refund following shortly after.
That's a clever, albeit deceitful tactic. Another method to spot potential fraud is by scrutinizing tax forms. Banks are increasingly calling listed tax preparers to verify if the borrower is indeed their client. This is particularly important for self-employed income applicants where fraud is more prevalent.
It's interesting how the verification process is evolving. Robinson mentioned that if a tax form shows a preparation fee but lacks an accountant's name, it's best practice to request a letter from the accountant or a new T1 general with the accountant's name. This adds a layer of verification for lenders.
And let's not forget about down payment fraud, which remains a significant concern. Robinson suggested that brokers ask a trifecta of questions about the down payment, how the money was obtained, where it's resting, and whether it makes sense for the borrower to have it.
That's a solid approach. A reasonability statement explaining why the down payment is logical can be crucial. Brokers should also be vigilant for sudden changes in a borrower's application, like a shift in the source of a down payment from a gift to a different method when proof is requested.
Exactly, Steve. It's about thoroughness and attention to detail. Robinson emphasized the importance of having backup documentation, especially if a large sum suddenly appears in an account. This transparency is key in preventing fraud and ensuring a smooth process for legitimate applicants.
As the real estate market continues to evolve, it's crucial for brokers and lenders to stay informed and adapt their practices to address these challenges. Keeping an eye on these warning signs can make a significant difference in maintaining the integrity of the mortgage process.
Well, Steve, it seems like Burlington's real estate market is experiencing a bit of a downturn. The latest figures from the Toronto Regional Real Estate Board show that the average home price in Burlington fell 6.9% to $991,062 in October 2025. This is a significant drop from September, and it's also down 8.9% from the same time last year.
That's quite a shift, Sandy. A decrease like that can have various implications for both buyers and sellers. With 214 home sales and an average of 39 days on the market, it seems like the market is cooling off a bit. There were also 815 active listings at the end of October, which is a 15% increase compared to last year.
Yes, Steve, and when we break it down by property type, detached houses averaged $1.24 million, which is a 3.9% drop month over month. Semi-detached houses saw a 5.1% decline, averaging $900,571. However, attached houses experienced a slight increase of 3.3%, now averaging $923,988.
It's interesting to see those variations, Sandy. The townhouse-style condos also saw a decline, averaging $742,481, which is a 0.8% drop from September. Meanwhile, apartment-style condos showed a slight increase year over year, despite a minor month-over-month decrease, averaging $672,811.
And looking at these numbers in a broader context, since October 2015, the average sale price for all houses and condos in Burlington has increased by 56.4%. That's a substantial gain over the decade, which highlights the long-term growth despite the recent declines.
That's a good perspective, Sandy. While the current downturn might be concerning for some, it's essential to remember the overall upward trend over the years. It's all about understanding the cycles and being prepared to adapt to these changes in the market.
Absolutely, Steve. It's a reminder for both investors and homeowners to stay informed and make strategic decisions based on the current market conditions. With that, I think it's time to wrap up today's episode.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.